Welcome to PM Express Business Edition. The stock market has been seen as an avenue for raising long-term funds. But in the midst of a pandemic, can we see it or describe it as a viable option in raising long-term funds, especially for those medium and small-sized businesses? Well, I'll say that it might be a good time to engage the Managing Director of the Ghana Stock Exchange, Mr. Eko Afezi. Thank you so much, sir, for hosting us on your trading floor of the Ghana Stock Exchange.
Yeah, it's indeed a pleasure to have you on the floor of the exchange where you can see what is happening in terms of the trading live on the electronic screen.
How are things? How have you been doing yourself working in a pandemic era? I mean,
it's quite interesting.
Tough, interesting, challenging?
Not tough. Interesting in the sense that somebody asked me beginning of last year whether the exchange had prepared all the time for such an occasion or such an event to happen. And I asked the person why. He said it was so easy for the exchange to operate remotely. The reason is simple. About let's say 11 years ago, 2007, we began the process of automating our processes. By 2008, we had completed the automation of our trading, client settlement, and also depository. And right from the word go, we're doing remote trading. That is why on the floor today, you're not seeing anybody here. So to work from home or remotely was very easy for us because we had everything in place. Disaster recovery side, ability to switch on systems from home, etc. So it's been quite interesting to be working remotely in these times. Of course, when it comes to the economic terrain, the pandemic has actually caused a lot of damage to economies all over the world.
But Mr. Afezi, I mean, that is more of the companies or the firms on the market because these structures have already been in place and therefore remote work wasn't a challenge. What about you yourself and the workers here at the Ghana Stock Exchange? In these times, trying to monitor the workers, do all those things, how easy or how challenging was it?
Beginning was quite tough for workers who have been used to coming to the office and interacting with their colleagues and meeting clients and meeting visitors who come to either for education or something. So we had to sensitize everybody and also make sure that about 50% in the beginning was working remotely and 50% here. Now we've reduced it to like 75% working remotely and 25% here. For myself, I do most of my work remotely from home. Then I pass by the office every single day, no matter the time, to make sure to catch up with all the other paperwork that you need to do from the office. The staff are okay. We've supported them with their resources, and we're going to do a lot more in order for them to fully operate from home, including additional power backups for them, so that they don't have issues with power interrupting their work.
If you look at the market, do you think that from just the hard numbers, you've really benefited from this pandemic, just like other sectors, or maybe you were just in that recovery mood, and this is how we're seeing?
That's an interesting question because 2020 was one of our best years in our history. We had 30 years, and you wonder why in the midst of the pandemic. There's a reason. One is the fact that 6 years ago, we established a bond market. The bond market is a market for what we call fixed income securities, such as bonds, corporate bonds. Bonds simply mean companies borrowing from investors for a certain period of time and paying you interest. The bond market was established mainly with government securities, which are virtually risk-free, with a few corporate bonds. Then, of course, we have the equity market, we have the main market, then we have the alternative market. In an economic environment where you normally find people believing that investing in risky assets at that particular time was not the best to do because the returns were not going to commensurate with the kind of risk you're taking. Most of them now shifted to fixed income securities, safe investments. So they're looking more now for security for their investments.
What are those fixed income securities that we're talking about here?
We're talking about you mean the type of securities?
Yeah,
so we're talking about the government bonds. Yeah. So you have people doing treasury bills, which is the shorter end, doing treasury notes, which is like the 1 year. Then you have the 2 years, the 3 years, the 5 years, 7 years. Government has gone all the way to 20 years, which is a very interesting period for all of us, where they've extended the maturity of the bonds to 20 years. So we had more people now shifting all the way from risky assets to risk-free. Equity was also there, all right. Equity market had the highest value traded, second highest value traded in our history. Let me just give you some figures to illustrate that.
These are the normal companies that are listed on the market, like MTN, like Unilever, and these are classified as the equity market, right?
Exactly. Okay. Thanks for the explanation to your. So the equity market is a market where you trade shares. Shares normally will indicate ownership in the entity. So when you mention MTN shareholders, they are part owners of MTN. Yeah. So what the stock exchange does is to provide a platform for trading of those shares, so they can get liquidity or you'll be able to sell and get your money back. So when you take the two markets, in 2019, the bond market, we had about 55 billion cedis worth of trades, 5 billion trades. In 2020, it was 108 billion, double that of 2019, because of what I was telling you, coming from the fact that people were moving away from risky assets. And that was as a result so many things: financial sector reforms, the economy itself, etc. And above all, high interest rates. People are certain about what they'll get. 18%, 17%. When you buy shares, you're going to rely on what the company will be able to generate at the end of the day in terms of the profit and give you part of it as dividends, or should prices go up, then you make a gain. So that's what happened to the bond market. Astronomical increase in the values traded. Once at the same time, we had a lot of shares being traded on the equity market, especially in companies like MTN, which brought a lot of liquidity to our market when they listed in 2018. So there also we had values traded going up. So that's what has happened during this period. And it's continuing in 2021 on a more positive note, that the equity market, which was negative in 2019, 2020, and 2018, is beginning to move into the positive zone. I was very excited today when I heard inflation has come down to 8.5%. That's good news. If we can get interest rates dropping, then we're going to see the equity market also developing, and we're going to see more companies trying to do corporate bonds on the market.
But one interesting thing I wanted to look at again is that often individual company performance drive market interest. But again, back again to last year's performance, you've given me some explanation, but again, does it mean that even though the companies might not be doing well in the early part of the year, there was still interest that was driving market activities? And I find that to be very interesting.
Yes, when you take a look at the financial results of especially the banks listed, you find a very interesting trend where most of them made good profits in 2020. Increments over the previous year of 20%, 30%, some as much as almost 50%. So you're right. Performance of companies will drive interest and drive the demand. So that drove it. And of course, MTN was another factor where they made profit over 1 billion cedis or something. I think the highest maybe on our market. So that also drove the interest on the market. So it's a combined set of factors that impacted on the market in the midst of the pandemic. Investors are looking for areas to invest. Those with a lot of money who used to go to China and bring goods and all that couldn't go. The money had to work. And you need to look at ways of how the money could work for you. So one thing, straight away look at where can I invest that and make sure my money is safe. So you buy a 2-year bond, and the market is very liquid. At any time, you can go and sell it and get your money back.
So people find the market as an alternative to place their funds.
You're right.
That in other sectors, there wasn't much things happening there.
You're right.
Again, so fast forward as well, the market is doing very well, as in the Ghana Stock Exchange.
Yes.
For you, what is driving this sustained performance?
Let me first of all give you a general statement. Markets don't go down forever.
It's always a flip-flop.
Exactly.
It goes down, it comes up,
exactly.
Up, it goes
depending
down.
on what's happening to the economy. Getting to the latter part of the year, I was telling you where investors were now putting a lot of money into the bonds market. A few now started putting their money into the shares, and they realized that companies that had done well. So we saw the confidence coming back. Let me give you typical examples where you've seen prices of MTN going up by 70% or more. You've seen Kalba going up by over 20%. About 8 of them have had their share prices actually moving up. Then when you juxtapose that with their performance in terms of financial performance, you realize that yes, there is some link between the performance of the companies and also what's happening to the share price. So there's a general confidence in the market, and it's all because investors are looking for where to put their money as a result of what has happened to businesses all over. And that's why it's generating some interest. And that's why I hope that that interest will be sustained. For first 4 months of this year, we've had the market going up by 35% as we speak. Okay, first quarter was like 30% almost. So end of April was like 32%. We've had values doubling, about 180 million cedis worth of shares traded compared to 99 million in 2020, the same period. And when it comes to the bond market, that's even more interesting. We've had about 78 billion cedis worth of bonds traded compared to slightly over 30 billion same period last year, so way over 100%. So that is what we are seeing in terms of the performance of this market going forward.
Mr. Fitz, how do you convince others? I mean, in the midst of COVID that impacted several sectors of the economy, and these are businesses that were operating the economy, but still the market was kind of a little bit immune. Then someone will ask, what was happening? Is it the voodoo trading that was going on, or what? That it appears that the market was somehow.
You know, in the midst of problems and issues that crop up, people become more innovative, and people start thinking very deeply about what to do to overcome such things. I just heard on your own station a woman who started going to hibiscus juice or so. Yeah. She sat down and realized that people needed that during that period. So she went into it, and she's doing well. It's the same thing when it comes to corporate bodies. Working from home, remotely, change your business strategies in order to survive and even make more. I was talking to somebody who runs a training institute. The pass rate he was telling me was higher in 2020 than all the years before. Maybe because people were learning remotely and people were locked down for some time, they had time to study. So in the midst of all these issues, you tend to have people being more creative and innovative in order to keep businesses afloat, in order to keep the human beings alive in terms of how you survive during this period. So that is what is happening. There's no voodooism about this. What is happening is that some companies are doing well, and people are taking advantage of that. The bond market will continue to be doing well going forward. Interest rates will fall with time, and you'll still find some people who will not buy shares because, generally speaking, Ghanaians don't like taking a lot of risk when it comes to investments. Apart from a few people who had their fingers bent seriously, and government had to save them last 2-3 years ago. So you can imagine those people. They'll be going back to safe investments. And that's what's going on.
How do we sustain this kind of sterling performance that we are witnessing for a while? Because a good market performance, I have some shares in the market, and I looked at the prices, and it's like somebody made me 2 days ago where he was willing to sell the shares, and I was actually trying to go in for it. What are you doing on your side of the market in trying to sustain this good run that we are seeing, which could again convince more companies to come on board and even more retail investors to also participate in the space?
That's a good question because as I was talking about the external factors that have influenced the market as an exchange, we're also looking at it from the angle where what do we do to make sure that investors continually become interested in the market, and those who are in there already stay. Then also corporate bodies utilizing the market to either raise money through equities or the bond space. Stock markets are driven by information. So that is key for us. So if you've realized, we've improved our information dissemination to the public in terms of having the exchange in the news all the time, talking about the results on the market, talking about how companies are churning out results and doing well. So we're trying to improve on our information dissemination. Information must be timely and must be adequate for people to be able to take decisions. So that is key. People want to know what is happening to the share price of Cal today, and what happened to Cal's Q1 or first quarter's results as were released recently. So that is one key thing that we're doing. Coupled with that is education. We're going to improve upon our educational activities, where we make sure we continue to educate investors and potential investors about the benefits of the market and the risk you take when you get onto the equity market and the return that you can get, and the fact that for all of you who have done finance, most of you tend to look at mainly return and risk and forget that liquidity is a major issue. So that's where the exchange is. We provide a platform to create that liquidity ability to sell and get your money back. So that's another area that we are looking at. Then as an exchange, it's a market or it's a platform for trading securities. So what we decided to do is to create platforms for trading all types of securities. So very soon you hear about OTC market that we're trying to create. It is with a regulator. They're finalizing it. Where we allow
what is that?
Okay, so where we allow companies that have floated shares, in other words, public companies or public limited liability companies that have floated shares but are not listed. Like example, a company A is not listed, but they have shareholders, and they don't want to list. So what we're saying is that then trade those shares on an electronic platform. They're not listing. So we'll create that opportunity also for liquidity for those shareholders. So that's one area. You heard of green bonds and green markets coming up. We started the process of how do we create a green market. We are liaising with Environmental Protection Agency. They came to us interested in what we call biodiversity credits. So that gave us ideas as to, then why don't we just create a market for all these instruments that are related in quotes to the green, sustainability, kind of products or so, or products related to the environment, climate, and all that. So that's something we are looking at. We're also looking at the derivatives market, trading futures. We don't have many shares listed on the market, less than 40. Can we create other instruments out of these shares? Like what they call a future or an option on maybe our index. In other words, people will put together an instrument which will be called an index, whatever future or options or whatever they will do, and buy these instruments on the market. Or we create instruments out of some of the shares that are listed. So we're also looking at that aspect. Most of the time people hear about commodity markets and the futures. But you can also create instruments on shares and indices and all that. So we also, those are futuristic things.
But Mr. That would be a good time for us to just hold it then as we take a break and we'll be right back as you look at more other projects that you are undertaking and also the critical question about raising funds in these times. Is it a viable option for us? Or listen, it is a big boys club. A George Yafi & Co. can't play in this space. This is PM Express Business Edition. We'll take a short break and be right back as we talk about the Ghana Stock Exchange and raising funds in these times. Is it a viable option for you out there or not? Be back after this break. Welcome back to PM Express Business Edition as you look at the Ghana Stock Exchange in the midst of a pandemic when cash is one of the most expensive commodities. Can I turn to this market as a George Yafi & Co., a medium-sized business, to raise funds? Or again, it's for just the big boys? I can't play in this space. Mr. Afezi, thank you so much, and we are back from the break where you were trying to round up on some of these initiatives that you're undertaking now, and what else again are you looking at doing to again expand the market?
There are two key challenges facing our market, and I always keep them very simple. One is, how do we get more companies listed on the market? How do we get Ghanaian companies to raise capital on this market so that they can impact on the development of the economy? That's very key. Then also, how do we improve liquidity on the market? In other words, how do we make it easy or easier for those who have those shares to be able to trade and get their monies back? Those are the two key challenges that we need to work on. So as an exchange, we've come up with various strategies as to how to increase the listings. One is being now very aggressive on promoting listings to the private sector. So we began some virtual meetings and one-on-one meetings with potential companies, both multinationals and local companies, as well as also engaging government through SIA to look at some of the state-owned enterprises that can utilize the market to raise long-term capital and improve their operations. You know, they all will end up in what people will say job creation. Will end up in making sure that the economy develops. So that is why we are looking at that aspect very critically. How do we get more companies on this market? And at the same time, making sure that we can get liquidity. That is, people should not buy and just hold forever. We should be able to make sure that we can get people who buy and sell, so that those who want to sell at any time can get that fast. So some of the other things that we are doing is we are engaging farm managers through MPRA, etc., to make sure that farm managers begin to also play an active role in the equity market. Now they play a very active role in the bond market or fixed income, because it's our pensions, and they also are looking at the risk factors. So if you watch the performance of our market into great detail, you realize that pension funds are beginning to buy some shares on the market. They are looking for solid companies with great future. It doesn't mean you can't be a medium-sized company. You can be a medium-sized company, but with growth potential. Those are the things that investors are generally looking at. So those are some of the key things that we are doing. We have a 3-year strategic plan, and when you look at it, one of key things, outcomes of that 3-year period we are looking at for is having been able to create a platform for raising of capital, and also providing a platform for investing or creating that liquidity for shares. In the long run, we want to play a vital role in the development of our economy.
But Mr. Fezi, some would say that as the market not taking on too much, because you still have the main market that is still in the growth stage. It's still in that stage of appealing to that man at Abosokai, still in that stage of appealing to that man, maybe Swami magazine market. And then you bring in on derivatives market, and you bring in on a green market, and you bring in a pension market. Aren't you swallowing too much meat that will choke you up?
No, most of the time you've got to look at it from a strategic point of view. You are not appealing to the same group of people for all the markets. You talked about the main market. We've created a main market. The main market for companies that can meet certain requirements, have no less than 100 shareholders, produce 3-year audited accounts, have the 2 million or so city capital, which we are trying to see whether we can do something about it in terms of increasing it. So that is for certain size of companies. Then we created the alternative market. The alternative market was to attract startups with growth potential, or companies with growth potential, medium-sized companies. So the target was mainly domestic companies that are growing. Currently, we have just 6 companies there. We need to grow that market. So what we are doing is, we're taking a second look at that concept, for instance. What can we do to attract more companies onto the alternative market? Because we've been running it since 2013. We're in 2021. 8 years, and we still have 6 there. No, we are not impressed. I'm not impressed. So we're taking a second look at it. There are issues like underwriting. Can we scrap that? Underwriting is, we're saying, if you're a broker or an investment advisor sponsoring a company onto the alternative market, then you must take the minimum, of that offer, assuming the company wants to raise 1 million. And the million is 200 cedis. That sponsor must put together that amount so that the offer becomes successful. So you can do it directly or indirectly. You can even borrow to do that. We haven't had that working. We try to create some incentives, listing support fund. Come and take money, pay your advisory services, etc. You virtually don't pay fees on the market. So the question has always been, with all these incentives, how come most of them are still not coming? So we decided, look, maybe they're not ready. So we'll have an incubation program where we'll select companies, liaise with AGI and other associations, select companies, take them through the process of preparing to come to market in terms of governance, in terms of your financials, etc. So that's one another group. When I talked about the derivatives, for instance, that is for sophisticated investors. Those who really understand. So it's not for the ordinary investor. So we're creating these markets for different categories of targets audience, or target market, or target investors, or target entrepreneurs. So that's how we're looking at the entire strategy going forward.
Mr. Fezi, as an MD of this platform, this market, do you see it as a viable space to raise long-term funds?
It is. It is viable, especially when you look at the kind of monies that have been accumulated by pension funds in this country. And that's one source of long-term funds. How do we get pension funds to put their money into businesses? And that's the best way to go to develop the economy, than to put the money in just government instruments. The best way is to help grow corporate entities. private sector, who can employ more people, so they can get the economy rolling. The reason why I'm saying that is the fact that you must make the offer attractive in order to attract investors. I always ask people those questions. Will you invest in a company that has no great future and is loss-making? No. You want a growth company. You want a company that has the potential to make a profit. So the same thing applies to fund managers and those who are running the pensions. We have insurance companies out there. They're doing a lot of life now, life insurance. Where did they put all those long-term funds? You must create the supply side for them. You must create the instruments for them. So that also leads me to the bond side. If they don't want to invest in equity, can we get corporate bodies issuing longer dated corporate bonds? Now we have 11 issuers on our market. They've raised about 8 billion. Can we get corporate entities also doing a 5-year bond, a 10-year bond? Because the government has set the benchmarks of all the way to 20 years. So it makes it easier. That's why I was interested about in the fact that inflation is coming down, and if you can get interest rates coming down, you're going to see more corporate entities maybe looking at the bond space. If most Ghanaian entities don't want equity because of ownership, then how about borrowing for a longer period so that you can still get your 5 years, 7 years, than to go for short term from certain financial institutions.
Let's get to the meat proper. And Nana Power Companies and Co. actually is a medium-sized company.
Yes.
He wants to turn to the stock market to raise money.
Yes.
Can you help me out what this guy who is into building construction equipment and all the rest and is making a turnover of even more than 100 or even 200 million or something, or 200,000 Ghana cedis? Is the place friendly for him to turn to raise long-term funds?
That's why we created an alternative market.
Just walk me through how this person has to go about it.
First of all, we're saying you must be sponsored to the market, or you must get certain professionals licensed by the Securities and Exchange Commission to lead you through the process.
Why is those things so critical? Because then those things are seen as
you need to get
barriers.
No, you need to get licensed professionals, people who have been trained. Don't forget, in a normal parlance, let me just say, you're dealing with people's money. Okay, so you must be careful how you handle the money. Okay, so you must get people who are professionals, who have been licensed, okay, to be able to do that job. Raising capital cannot just be done by anybody. You've got to understand how you raise the capital. So when it comes to the alternative market, for instance, what we are saying is that get a broker, get an investment advisor who will hold your hands. You put together a team of accountants who will look at your books, auditors will put together your historical financials. I'll come to the reason why it's important. You put together, then also basically develop a document called an offer document. Some will call it prospectus. That document is just telling you everything about the company and the future prospects. So it's dealing with what the company does, the products, their past records, governance system, who are the board of directors, who are the owners, etc. Then also the future. The reason why these are important is the fact that you, George Viafe, if you want to buy shares in the company you just described, you will need some information about the company. And that information has to be credible. You have to trust the person who put together that information. That is why you need those licensed professionals to be able to tell you, George, this company has been making profit for the past 3 years or 5 years. This company has future growth prospects. This company is very well run. It has a good governance structure in place. The people who are on the board are very well qualified. The executives are very well qualified. That is what will make that company attractive. So you go to SEC, Securities and Exchange Commission, they will approve the offer for the exchange. All that it means is that after you've carried out your offer and it's successful, the shares will now be put on the market. Don't forget, you were using the term secondary market.
Yeah.
But in the layman's language, it is a second-hand market. What it means is that you're dealing with instruments or shares that have been issued already. So you're not raising new capital on the exchange, but you're just trading what you have. So in order to get those shares, then you must meet our requirements. Very simple. Minimum stated capital of 250,000 cedis. Post-flotation. 20 shareholders. 1 year audited accounts, or that can be waived. Or a 3-year business plan showing viability. These are the type of requirements we've had for years.
You
But
think
companies are not coming. Why? 1, they're not ready. 2, most Ghanaian entrepreneurs don't have the culture of sharing. So they don't want other owners to join them. I keep on giving you this example. Which one is better? Bill Gates does not own 50% of Microsoft. You go and check, he owns less than 20%. But he's one of the richest people in the world. So is it better to own 20% of a 1 billion cedi company, or is it better to own 100% of, let's say, 100 million or 50 million? That's the question you must answer. But preparation is key, and making the company attractive is key, because you are dealing with the demand and the supply side. What I mean is that you're dealing with companies that want to raise money, but at the same time, you're dealing with potential investors. Potential investors don't throw away their money. They're looking for returns. They minimize their risk. But at the same time, they want to make sure that the shares can be traded later on for them to get their money. So that is why you must make the share offer attractive, make the company attractive. So as an exchange, you're trying to come up with an incubation program to take companies through this process. At the same time, we keep on going to them and educating them. We're going to step it up from now going. We'll be doing some now, but we'll step it up.
You don't think that the requirements are too stringent? That will make it difficult for this Nana Power company to come on to...
I just mentioned it. 250,000, 20 shareholders, 1 year audited accounts, or 3-year business plan. Nana Power's company must make sure that their books are in order. They have a good governance system. It can't be one-man show. Whether be used in other language, right? You must have a board of directors. 50% of that board must be independent, because you want to protect the investor. Don't forget the other side of the coin. People are putting in their money. So you must utilize the money, generate profit for the company, so that the shareholder can get dividends, or the share price can go up, so they can get capital gains. And now capital gains is even tax exempt. So it makes it easy for you to make a lot more money from even capital gains.
First, we'll take a short break and we'll be back again. Now, you think that whether this avenue is a good option compared to debt or walking to a bank? And also, how do we also excite that small company that comes onto the market during this time to still be on the market, because they believe that the stock exchange is a good avenue to raise long-term funds in these pandemic era. This is PM Express Business Edition as we look at raising long-term funds in the midst of this pandemic. Is it a viable option for you out there, or there are still challenges out there? This is PM Express Business Edition. Take a short break and we'll be right back. Welcome to PM Express Business Edition after the commercial break, our 8th edition of PM Express, and happy Eid to all our Muslim friends out there who I know in their homes right now, and they are watching because how to make money to celebrate the next Eid as well. You're looking at raising long-term funds for those small businesses out there. How viable is this market for them, and what are the other alternatives that they can explore when it comes to raising funds? And I'm engaging the Managing Director of the Ghana Stock Exchange, Mr. Eko Afezi, running us through a lot of things that you're doing. But again, back to my question and the concerns about the fact that the perception out there is that it is still a club for the big boys. It is still a club for people who have made money and they don't know what to do with it.
I want to demystify that.
How is the market dealing with that? And are you encouraging people and making it easier to raise funds?
One way we're dealing with that is we have a team with a department called Listing Department that has been charged with targeting various companies, led by a seasoned broker, going out there and talking to as many companies as possible and taking them through the process. But for the COVID, we used to have monthly information sessions here where we invite companies to come and we talk to them about raising capital and also all the myths, try and demystify all the myths surrounding raising capital. There are various stages in a company's life cycle, and that is why we need to be extremely careful about financing. When a company is very small and is growing, most of the time it takes, they use their own money, that's the owners, or they borrow from friends, or they come together with friends and start a business. As they grow up a little, sometimes they will need some patient capital, like venture capital, or some of those things. Then, as the company reaches a certain level where you need some large sums of money, and for very long term, that is when you start now looking at which other avenues, other than banks, where, because banks will give you short term, at most some medium term. So which other avenues do you have to raise finance? And that has been one of the major problems facing companies in Ghana. That is why you find most of our companies, local companies, are not very large. They're still small. We've had entities before, institutions before, that have grown, I don't want to mention names, which had great potential, but they all collapsed along the line. Sometimes mainly because of financing, wrong financing arrangements. Let me give you a typical example. You go and buy a machinery for producing whatever product. That machinery is going to last for, let's say, 10 to 20 years. So why do you want to take 1 year's money to do that? When within 6 months or a year, you got to pay back that money. That is why people will now look for longer-term financing arrangements. Various ways now. We've talked about the equity side or floating shares. Let people give you money, which is more or less permanent. You take the money. If the person needs the money, you can go to the exchange and now sell. What we've provided for the last 6 years is the bond market also, where apart from getting people to become owners, you can also go and borrow. Borrow for 5 years. Borrow for 6 years, 7 years. We're beginning to see some few companies doing that. But once again, your books must be in order. You should be able to generate enough money to be able to pay the interest payments when you borrow. If you're not able to do that, then you can't go into that space. But then, we have so many Ghanaian companies who borrow from the banks who are able to pay the interest. So why can't you do a bond issue and pay the interest on that? The reality is that it might take you a month or two in order to complete that process, or 3. And that is why you need to plan ahead of time when you want to do a bond issue. But the bond market is a market that I believe, and I mentioned it today, that corporate bodies that are not interested in getting new owners or sharing should be looking at the bond market and doing corporate bond issues. We're trying to encourage the entities that give them those loans to also turn around and be issuing houses, for instance. As you give him the loan, you also tell that company that I can also do a bond issue for you, I can do an equity issue for you at the same time, because you always go to the bank for funds for your operations. I mean, short term, there's no doubt about it. But you need the longer term funds in order to grow.
I mean, earlier on in your submission, you mentioned that you don't want to mention names, but I think that for this one, maybe you have to help me with something.
I won't mention names.
Do you have any success stories of these companies that came to the secondary market, and you can say that, George, listen, for those doubting Thomases out there, this is a clear example of a small size company came through the secondary market, and even look at the way that company is doing,
Okay.
unless it doesn't want to, it could even move to the main market.
I'll just give you just one, Intravenous. The company in
Koforidua.
That does all those products in the medical area. They got listed on the gas, and they raised almost 7 million. They're doing very well now, and I suspect going into the future. One good thing about listing or getting onto the market is that at any time once you're ready, you can raise more funds. So they have the opportunity to raise more funds to expand and grow as we move on. I want to see more such companies coming onto the market. It's not been too good for some companies, and that's the truth, because their lines of products, the kind of product they're manufacturing, or the industry as a whole was not doing very well. So they had to delist for them from the market, for instance. You normally find companies listed on exchanges also, a few of them delisting, one, because they want to go and restructure, or two, maybe the company itself is not doing extremely well, or maybe they don't meet our obligations, continuing obligations. So to sum it up, it is possible to raise long-term finance in this country by either doing shares flotation or doing a bond flotation. Once the company puts its books in order, governance, etc., and make it attractive for investors.
You talked about delisting, and I know that branding communication matters here. In one breath, I wake up one morning and I hear that this company has been suspended. In one breath, I wake up another morning and I hear that this company is being delisted. Do you think that it tells a good story about the market itself? At a time when you want to encourage more companies to come onto the market, we hear some companies are getting on the market. Is it really a success story? Is it good in that blue ocean out there if people are already running out of it?
I don't want us to start analyzing the kind of companies that are delisted. But if you do the analysis, you realize that most of them voluntarily decided to delist. Because one of the main reasons they were giving was going back to restructure their operations, etc. Some of the companies used to do a lot of manufacturing in Ghana because of competition from all the goods from all over the place. They're not able to do the manufacturing anymore. So their line of business is completely changing. So they decided they must go out there and maybe change the business. And some of them eventually do well. And that's the reason why I told you that we want to create an OTC market, over-the-counter market, for shareholders of such companies to also still have access to liquidity. But it is normal. Delisting takes place in most countries. The other one, the worst one, is for the exchange to delist you because you're not meeting our obligations. We haven't done that for most of the companies, apart from a few of them. We have a few companies on suspension because they are restructuring. For that one, we can mention some of them. CPC Sylvia, PBC is trying to restructure. Then we'll leave the suspension for them shareholders to be able to trade in those shares.
So the over-the-counter trading, I mean, all other things being equal, is it going to happen this year?
Which one is?
The OTC market.
Oh, yes, it's going to happen. We did the rules somewhere last year. We're just waiting for the regulator to give us approval. Like I told you, I mean, we're just creating markets for different target groups. So the OTC, I told you, is for those companies that do not want to list, but they have shareholders. So we give you that avenue. It goes with its own features and also attractiveness. Most investors, fund managers, etc., would like to invest in listed securities. Listed. Okay, that's important for them because they are regulated entities, and that's what gives them comfort in terms of putting their funds into those companies. Don't forget, one of our main and key objectives by even the Securities Exchange Commission and the exchange is how to protect the investor. It's very important to protect the investor.
Not boxing ourselves into any names. Should we look forward to some new listings on the market this year?
We're trying hard to see whether we can get a few this year.
Two,
we
three,
might get,
4, 5,
yes, we
10, 20.
I'm an ambitious person, all right. We are pursuing very aggressively companies to try and get companies on the market.
That we made serious progress.
Our target is very simple, to just get 5 companies on the main market and maybe possibly get another 3 to 5 on the alternative market. And that is what we are working towards. I mean, if you take the whole of 30 years that we have, under 40, if you do 5 in a year, you've done extremely well. I've told you before, my target and the target is to hit the 100 listings on the market as quickly as possible to make the market look more attractive to investors.
In terms of the broader economy as well, how does the external market or the external environment also influence the market performance as well? And if the economy is doing well, obviously there will be the rippling effect on the market.
That's a very excellent question you're asking, because the economy impacts positively or negatively on markets. If you take interest rates, your level of interest rates will impact on the market. It is a well-known fact that if you have higher interest rates regime, you're not going to get people buying shares. They'll go to those higher interest rates instruments. So it's always important to look at interest rate. For foreign investors, they're also looking at the foreign exchange stability. It's very important. Then generally, the macroeconomic environment must be conducive for companies, industries to perform and grow. Because don't forget, these are companies that are also into manufacturing or into services, etc., and they live within the economy. That is why markets reflect generally what's happening to the economy. If you look at the trend of our index or indices over the period of time, it has always reflected what has happened in the economy. The market was down when we had the financial sector reforms. The market was down when we had power crisis some years ago. The market was down when we had financial crisis somewhere 2007 or 8 or so. So the market follows what happens in the economy. That is why when governors or central banks speak, they tend to influence the market. When the finance minister speaks or when the president speaks, not to digress, we heard of recently in the US where the Treasury Secretary made a comment about interest rates, and he saw the ripple effect on the New York Stock Exchange. You saw share prices going down. So that is how economists reflect. That's how stock markets reflect what's happening in the economy, and we are gradually getting there. And that's why we want to have a wide array of various sectors represented on the market, from agriculture to mining to services to banking, insurance, etc. on the market.
So, Mr. Fitz, I mean, a lot of things happen on this market that often excites me when I come here for programs. And I know one thing that happens is about the ringing of a bell to signify a lesson of a new company. But this time, we're drawing the curtain down this program. What is your last words to the anti-market listers, those who are having their own perception about this market? It's a rich boys club. This market is not for us. And for those who think that, listen, it's for some people who've had some loose money and they want to play with it. What do you have to tell these people out there?
The market is for all of us. For investors, it provides you an avenue to invest in shares and bonds on the market. And then for entrepreneurs, it provides you also the avenue to be able to raise capital by floating shares or bonds. So the market is for all of us, both potential investors and entrepreneurs or issuers generally. And I can say with certainty that this market has a great future.
Indeed, this market has a great future, and we're all looking forward to that great future for this Ghana Stock Exchange, just like other markets out there that actually signifies the economy and development in the economy as well. All too soon, we have to bring the program down or draw the curtain down for this program. I say happy Eid to all our Muslim friends out there who I know they are watching this program as it goes on live on Joy News. All the best and have a great day. This is PM Express Business Edition.